Welcome to this video. In this video we're going to look at how to crystallise a pension and take the tax-free cash. First of all, some context. In the plus button, under pensions, you've got a number of pension options here. Money purchase pension assumes that there's 25% tax-free cash available up to the allowance. So if you enter anything as a money purchase, it is uncrystallised. If you enter as a drawdown pension in Voyant, that assumes that the tax-free cash has been taken and it's fully subject to tax. So if there's tax-free cash available, enter as money purchase, and you can do the drawdown strategies from there, or if there's no tax-free cash, enter as drawdown. We're going to do a what-if scenario, and we're going to name it taking tax-free cash as a lump sum. Okay, so to take the tax-free cash, we'll go to Sarah's pension. So under pensions in the dashboard, we're going to click on her pension. In the left hand side here, you'll see crystallizations. So we're going to apply crystallization instructions by sliding this slider over to the right. So when do we want to do this? We have to set the timing. So I'm going to do it from plan start. Create new crystallization. I've just clicked on that event. Let's crystallize the whole pot of pension, and we'll make sure that we're just going to take the tax-free cash and not 25% of the pot that you've crystallised as a lump sum in the plan. So it's from the start, which is the year 1 of the plan, all of the money in the pension and taking the tax-free cash as a lump sum only. So we're going to click done here, there's the instruction in the pension, and click done. So now we see a big spike coming into the plan in year 1. If we turn the details on, you can see it's from the pension. Let's double click or click on year view to see the details. First of all, the cash flow tab, you can see the money coming in from the pension. If I click on pensions and go to Sarah's pension, I've clicked on it and you can see the crystallised amount is the full amount that was in the account. There's the tax-free lump sum, which we just saw coming into the cash flow, and the rest of the money has moved into the drawdown dash pension, which you can see here. So by default, where is that lump sum going? If we go to investments, you can see that the money that's not been used to meet expenditure is going into Sarah's cash, which is that default cash account set up by Voyant to capture surplus money like this if there's no other instructions. You can set up a transfer if you'd like to move it elsewhere. So let's say we'd like to move this surplus into an investment account. We'll go to dashboard, plus button, transfers. We're going to transfer to GIA from, so it's actually surplus in that year, so from all surplus, all available surplus, it's not reoccurring, and in timing, we're just going to select the same event as when the tax-free cash has been taken. So now the black line wraps around the bar as we now have instructions for the money. We can check in year view and investments, and we can now see that instead of going to Sarah's cash, it's now going into the general investment account as we've instructed. Let's go to Let's See Compare Plans now, and we're going to compare the taking tax-free cash what if scenario to the base plan where we've not taken the tax-free cash. So you can see the plan at the bottom of the screen has more orange because that is the uncrystallised money purchase pension taking off plus withdrawals by default. The plan at the top shows the tax-free cash, and then the pink, which is the drawdown pension, so using the rest of the money in the pension that's now fully taxable. If we go to the assets chart, we can put the legend on and now see the money that was in the pension is now in the drawdown. There's more money in the investment account because of the transfer of the tax-free cash. If we compare taxes, the spread of taxes is now different. The investment account is being used in the earlier years when the pension was in play before, and then the drawdown account is being used in later years. You can then go to Insights and run the insights as you would normally, but on the what if scenario. Thanks for listening.